Welcome to this episode of Yahoo Finance Presents. I'm Julia LaRoche, and I'm so pleased to bring in our guest today, Chamath Palihapitiya. He's the CEO of Social Capital, a part owner in the Golden State Warriors, and the chairman of Virgin Galactic. And he's also on a mission to build this generation's Berkshire Hathaway, and some even say that he's the next Warren Buffett. Chamath, I'm so happy to bring you in.
Hi, nice to see you, Julia.
All right, well, first of all, I think it would be really helpful for our viewers to get to know you a bit. You have this really incredible life story. If we could just get a bit more context. Your family was an immigrant family. You grew up in Canada on welfare. You have made it to the top. You were an executive at AOL, Facebook. You started Social Capital with this mission to solve really hard problems as it relates to society. I was hoping you could share your worldview, how your life experiences, even the life experiences in the last 3 months, maybe have changed or shifted. What is that view for you?
Well, the best way to describe this, if you want to think about it visually, is there's a game show called The Price is Right. And one of the games is called Plinko. And what happens is a person climbs up to the top of this sort of stadium and drops a Plinko chip, and it goes through all these different pegs, and sometimes it lands on 0, and sometimes it lands on 100, and sometimes it can land on 10,000. Or, the equivalent is like the Wheel of Fortune example where you spin the wheel. I think that a lot of people start with basically, not much to lose and everything to gain. I was one of those people. And I was one of the lucky ones where the Plinko chip landed in the right place. And through a combination of, honestly, some of my own hard work, but a lot of societal help, social programs that were there for me and my family, whether it was, financial assistance through welfare or the ability to pay for university. I paid $10,000 a year to go to one of the best schools in the world, the University of Waterloo. Universal healthcare. My father was a long-term diabetic, ultimately died of complications from diabetes, but it didn't bankrupt us. So I'm this, representation of what a lot of people are, which is potential, and but where circumstance went right. And I would just really like to be a part of the combination where I help the circumstance part of the equation so that many more people's potential can be uncovered.
Thank you for sharing that. And I guess if you fast forward to today, just given kind of the current environment we're in, we've been going through in the last 3 months a health crisis, an economic crisis, and now a social crisis as it relates to racial inequality. We have a lot of challenges that we're facing as a society. Do you see opportunity for young people who might be coming up? Is there that opportunity for them to, achieve the highest level?
I don't think it's not nearly the same way that it was before. And the reason is because we just don't have a very good equal distribution of opportunities anymore. And I think that the biggest problem with it is that we've allowed many of these nonprofit industries that should be there to help people act as sort of, essentially quasi-for-profit industries, but then they don't deliver the ROI that a shareholder-driven version of that industry would. So, you look at education or healthcare, those are two great examples where there's no reason why a COVID test should cost $800,000. And you can go on Twitter and you can see all these bills where you think to yourself, how is it possible that it takes $800,000 of cost to basically take a Q-tip and put it in somebody's nose and run it through a centrifuge? It doesn't. It's just that the industry is set up in a way where these weird, perverted economic incentives have gone unregulated and unchecked. Or you look at education, where you've taken a nonprofit commodity and you've made it a luxury good, and you charge people $40,000, $50,000, $60,000 a year, but then you graduate them into a job market that doesn't really give them a commensurate way to earn back the money that they paid into a system. So is the system set up in a way where you can achieve the same outcomes as before? The answer is no. I think that you actually have to have a move towards more capitalism, not less. We're in this weird sort of like nether state right now where people don't believe in capitalism, which I understand because it's largely been, perverted by a few. We've financialized every kind of asset and industry possible. But a more accountable form of capitalism, a more progressive form of capitalism, can actually make money for shareholders but return more value to people. And by the way, Julia, the best example of this are tech companies, because tech companies have created this massive deflationary cycle in consumer expectations. There's not a single person where you said, will Facebook, Google, Apple, Amazon give you more for more in the future, or will it give you more for less in the future? The answer is always the latter. But if you then changed Facebook, Apple, Amazon, Microsoft, Google, and instead said hospitals or education, you'd probably say we're going to get less for more. And so I actually think we need to sort of find a different way to incentivize a more progressive form of company running and a more transparent form of capitalism that I think can serve people better.
Yeah, a lot of things to unpack there, Chamath. It actually just reminded me of what you wrote in your annual shareholder letter. I'm just going to quote a little bit from it, and then we can talk about it. You said, "It's now most useful to go to the punchline. The Gilded Age seems to have so many similarities with today, both economic and societal." You talked about the Gilded Age, and then you tied it in with what we're going through right now with big tech. Walk us through what those changes could look like, those progressive changes, where we could be headed as a society.
So I think there's a pendulum in the world, and it swings between two poles. And you can take a lot of markets or a lot of industries, a lot of ideals, and basically characterize them in that context. So for example, we are in a massive move towards a more socialist definition of how society should work. And that is essentially the pendulum swinging away from trickle-down, top-down economics and effectively swinging towards a bottoms-up reallocation of social services and the quality they deliver and the prices in which they should deliver them at. Similarly, if you look at technology, we've had a pendulum that's swung between aggregated mega monolithic companies and highly fragmented disaggregated services. And the reality is that right now, I think that we are firmly in the motion of swinging things towards disaggregation. So what that means as a society is social programs are changing. I think what that means is that we're going to have a lot more things given to people at lower and lower cost. And those things will be consumed by many companies who can give that to consumers versus the few companies doing it. So what it means for tech is probably that it gets regulated, it gets taxed, it basically gets broken up. And that's sort of more a reflection of the moral temperature of society than it is on anything necessarily nefarious that these tech businesses are going to do or have done. It's just that I think people are tired of a few companies owning and controlling too much of the real estate and surface area.
It's just kind of where we're headed right now. I do want to bring this up because I know you've talked about it in the past, and I was hoping maybe you could weigh in here. Facebook, there's a lot of talk about Facebook these days. I think there's this campaign right now. You have 300 companies who have paused their advertising in the month of July. It's called the Stop Hate for Profit campaign. You worked at Facebook back in 2007, and I believe it was a Stanford talk that you kind of expressed maybe a bit of regret. I don't know if that's the right word, but you kind of talked about maybe the social networks in general kind of tearing at the social fabric. I would just like to get your update on Facebook today.
So maybe to go back to this pendulum analogy, if you look at what happened in cable news or traditional broadcast television, I think it's really instructive. In the 1940s and 50s, we had initially three mega stations, NBC, CBS, ABC. And then over the course of the next 60 or 70 years, through a combination of deregulation and legislation and government incentives, as well as economic incentives by different capital market participants, what we saw was an explosion of content. And what we saw were consumers who initially felt that three stations were enough, realized that they wanted 30 and then 300 and now 3,000. And I think that's exactly what's happening online, because we've started at a place where there were really two or three major outlets. And those two or three major outlets had to serve everybody. And what I think we're finding is that it's basically impossible to serve everybody with the same product, that there is no Swiss Army knife approach that works. And so what happens, if you ask me, is what I see happening right now is that Twitter tends to be pivoting more towards the liberal left. Facebook tends to be pivoting more towards the right and the libertarian, at least in America. And I think different products, TikTok, I think, is firmly less about a political persuasion, but more of an age demographic persuasion, and largely Gen Z with some millennials, and then, folks like me who want to pretend we're still millennials. But the reality is that there is this really interesting disaggregation that's happening in media. And, these companies are media companies. And I think that governments will regulate them as such. But as that happens, other products and services will emerge that fit niche audiences that meet the narratives that, frankly, they want to hear in ways that I think that's just the unfortunate reality of where we are as a society, which is that it's hard to find a way in a de-escalated manner to question your assumptions without feeling attacked. And until we fix that problem, which was more sort of a moral decision by society, these products will get more and more fragmented and serve more and more niche audiences with specific kinds of content.
It's interesting, the fragmentation, the niche audiences. Does that also, I'm just kind of throwing this out here, does that open up maybe an investment opportunity? Is that something, I don't think that would be something you're interested in, but I would be curious if that's something that would be of interest from an investment perspective, looking for maybe more niche areas.
It actually is. I don't think that you'll see me doing a lot of it. It's not something that I'm spending a lot of time thinking about. I tend to prefer sort of like emerging markets that I think are early but have been de-risked, that now just need execution. This is a market where I actually think there is a tremendous amount of market risk. That's a kind of risk I don't like underwriting. So what do I mean by that? I spent a lot of time helping build Facebook, but the real problem that Facebook has isn't necessarily about Facebook, but it's that consumer sentiment and consumer desires change, and they ebb and they flow, and they can be, very peculiar and, highly hard to predict. And so you're constantly chasing. It's kind of having like a hit record and trying to land another hit song after a hit record. It's very, very hard. So that kind of market risk is not that exciting to me. Other people, I think, will underwrite it. But I think what the result will be are just an enormous number of outlets that all have niche audiences that then you find a different and interesting way of pulling together.
Right. Well, I do want to turn subjects a bit. So one thing that a lot of people like about you, Chamath, is just the way you talk and the way it resonates with people. And the example of late is probably the interview that you did on CNBC around the time of the bailouts. I believe it was early April, if I recall correctly, and it went viral. And we've had that's gone through. Now we have, the Fed with different credit facilities, all of these different forces at play, trying to stem, I guess, the damage that's been done by the COVID-19 pandemic. I would like to get your view as, maybe a market participant and an investor. Are we setting ourselves up for some long-term pain here? Are we actually solving the issues?
I think that there's not enough first principles thinking by the Federal Reserve and Treasury. If you were to think about this problem from first principles, you would first just look at GDP and say, where is GDP coming from? So a different way of answering this question is, if I asked you to solve climate change, Julia, the first thing you'd probably do is ask somebody, okay, well, what are the sources of climate change, right? Like, there's no point solving a random long tail problem if it doesn't generate the largest amount of carbon output into the atmosphere. Similarly, if you look at and ask the question, where does GDP come from? The majority of GDP in the United States has always come from consumers. And it's consumer spending. And we've always been a consumer-led economy, which is what is really beautiful about the United States and our capitalist model, and why it tends to work, and how we've inoculated ourselves from corruption and kleptocracy and the things that frankly plague many other countries, including developed Western countries. So from a first principles basis, if you were trying to make sure that consumers continue to spend because you wanted to see GDP go up, you'd focus on income in their hands. And what you would do is probably give them enough money so that the amount of money they had exceeded the amount of money they needed to live. And the minute that happens, then what you would see are people then spending those excess dollars in the marketplace. That would then go to businesses who would then staff up and rehire, who would then reactivate their supply chain, who would then, staff up and rehire and activate their supply chain, on and on down the line. And what you would have is a slow rebuilding of the economic vitality of America. Instead, we didn't think from first principles. And we did what we've been doing for the last 40 years, which is this top-down idea that trickle-down economics works. And it doesn't work anymore. We have had this deflationary supercycle because of tech that gives consumers a massive incentive to not spend money because they don't care about buying clothes anymore. That's why you buy clothes at, Zara and Forever 21 versus, the Gap, because you'd rather buy a $5 pair of pants that you throw away than a $15 or $20 pair of pants. So we've been in this massive deflationary supercycle for a while. So giving money at the top and hoping that it gets to the consumer, it's just a failed idea. It's a failed concept that's had its day. So, my frustration is that folks aren't realizing this, because if you did, what you'd do is you'd put a lot more money into the hands of consumers and you'd wait for those dollars to flow up into the companies. And instead, what we did was we gave hundreds of billions of dollars in all kinds of random ways, and it's all largely going to go to waste, and it distorts the market. It makes it very hard to be anything except long the market. I'm long the market, and I have cash. Would I love to be isolating certain things that I think are, not set up for success, or trying to buy things cheap? Sure, but it's not possible right now.
Right. And of course, not everyone's exposed to the market, so it makes you also wonder, are we exacerbating inequality in our country through these programs?
No, we fundamentally are. And that's the other thing. It's a fallacy that, retail Main Street owns equities. And, whatever you want to think about Robinhood or all of these other things, DDTG, all this stuff, these are like long tail, small phenomena. Unfortunately, not enough retail investors own a participation in the equity markets of the United States. And so, when equity markets go up, it disproportionately helps institutional money and multi-generational money. And that doesn't have a real net positive impact to average normal people. That's why I think, again, putting money in the hands of those folks would have a much more positive impact.
Mm-hmm. I also want to talk about leadership. Maybe there might be even, we could probably say, safe to say there's been a void of leadership as of late, but I'm talking about future leadership. And I just want to read a tweet that you put out. You said, quote, "Earlier this year, I decided to donate to the Democrats whenever Trump did something cruel, reckless, or strategically incomprehensible. He has exceeded all my expectations. He is responsible for $750,000 to the Dems and counting." And in a reply tweet to that, because somebody said, even Alexandria Ocasio-Cortez, you said, quote, "I love AOC. She will be president one day. I will be there when she's ready." I was hoping you could speak to maybe what the future of leadership in this country could look like, should look like.
I think that what we're seeing right now is the disintegration of both the Democratic and Republican parties. And I think that, broadly speaking, that disintegration is really a good thing. I have no party affiliation. I really consider myself an independent, and I value that independence. And I would vote for a Republican. I would vote for a Democrat. I try to vote a person at a point in time. And right now, and my belief has largely been the following, Julia, which is that, politicians at their best are do no harm. Because the real things that move society forward are incentives. And incentives are best designed by people who are experts of policy, not experts of politics. And policy people are folks that have decided to study governance their whole lives because they care about it. And they understand how incentives can drive your and my and other people's behavior. So what I would love is a political class, broadly speaking, across both aisles, who just get out of the way and who don't make things worse, and who allow us to do what we're all capable of doing, which is taking care of ourselves and fending for ourselves. And at the edges, design incentives so that we can take care of ourselves in a more humane and, thoughtful way. So in that context, I spent a lot of time trying to understand where the parties are going. And I think what's happening is that the Republican Party is going to get torn apart because of people's affiliation or lack of affiliation with Donald Trump. Similarly, I think the Democrats are, too beholden to a gerontocracy class that's frankly fading away. It's the reason they lost the election. And I think people are very perceptive of that. So why is AOC interesting to me? Because I think she represents a standard bearer of the movement in the left. By the way, I also think that there's going to be standard bearers, young dynamic leaders in the right that do the same thing. And what that's going to do is actually create a movement among centrists. And so, the thing I didn't tweet out is I think AOC is wonderful. I think what she stands for is really unique and special. I also think I would say the same thing about a Republican, a young dynamic personality who has a modern view of economic theory and, social programs, which is sorely needed. But then what will happen when both of those two poles exist at scale is that there is an opportunity for somebody down the middle to unify the country. So I think the pendulum is swinging towards progressives, and then it'll swing back to centrism. I think centrism is where most of the good will be done. But that's sort of my thoughts. But I think AOC is spectacular.
Well, you've certainly made a name for yourself, and you have people who listen to you and respect your views. I was wondering, Chamath, when you look at social capital and just your broader ambitions, where do you see the ability, and how do you see your ability to really have impact and influence and make change when it comes to some of the most pressing problems? You open up your website, the first thing is that you're out to solve the world's hardest problems. Where do you see the opportunity?
Well, I just think that there are a lot of markets that, frankly, prevent progress. They just aren't run in a logical way that you would run them if you were trying to basically maximize long-term opportunity. I think too many industries are run for short-term cash flow, and that speaks to, frankly, the markets that have been distorted, that are too financialized, that frankly are run by financial engineers and not enough true engineers. So I like to look at markets that I think, again, are at the very early stages of having been de-risked from a market adoption perspective and now just need execution risk. I love businesses like that. That's sort of why, I fell in love with Amazon very early on. And I sold all my Facebook stock in 2014, and people just thought I was an idiot. I presented a $3 trillion market cap case on Amazon in front of 5,000 people at the Lincoln Center for Irisone, and I was laughed off the stage. I presented a Tesla case when the stock was $200, and I was laughed off stage. So I invested in the Warriors, and I was laughed. Everybody around me thought I was a complete idiot. And it's because I really love opportunities to invest in markets that are de-risked but have not yet scaled. So where am I looking now? To be very honest with you, I think climate change is the single biggest economic opportunity of our lifetime. Energy, clean energy, decarbonization. I still think there's a lot of opportunity in space. People ask me, by the way, why space? And the reason is that in order to do things in space well, you're developing a platform of technologies that frankly allow you to do incredible things, not just in space, but then as a result on the Earth. And when you look at tremendous advances in computing and other things, material science, a lot of it was because of our space program. And so, I'm pretty convinced that investing in space will yield enormously interesting outcomes. But those are markets where I'm spending a lot of time. In terms of the future, for me, my biggest thing is that I've really wanted to build a platform that allows not just myself to benefit, but other people who share my worldview. And, I can't claim that it's right, but I can definitively claim that it's mine, and that there's a lot of other people that share, some percentage of the same views that I do. Yet they're largely locked out of the financial opportunity to participate from that worldview. So my whole goal is take the money that I have. I've done a pretty decent job of proving to myself that I can invest in all kinds of very disparate markets and do it well, and now try to do it at scale in a way that is affecting a worldview that other people can choose to invest behind if they agree. And that would be the goal, is that, my ambition would be to try to take the company public at some point if I could, and frankly, give retail investors a chance to stand shoulder to shoulder beside me, to hold annual meetings, to see people that have owned the stock for 20 or 30 years and have done well for them and their family. It would be an enormous sense of accomplishment for me.
Mm-hmm. Well, Chamath, if you don't mind, I'll ask you one more question. And I remember the Stone conferences where you talked about Tesla and Amazon. And I don't think anyone laughed you off stage. Well, at least I don't remember that. I remember you caught a lot of people's attention, that's for sure. You just talked about the retail investor standing shoulder to shoulder. I would just like to get your view. What is kind of an uncomfortable truth or truths as it relates to Silicon Valley? Maybe it's big tech, or it could be a venture capital or hedge funds. I don't think you define yourself as a hedge fund manager anymore, or a venture capitalist, if I'm right.
I think the uncomfortable truth about the Silicon Valley ecosystem is that it's like every other market, which is that there's a period where we are defined by zealots, highly ambitious, very unique individuals that are there with no expectation of monetary reward. I think I was lucky to be there at the tail end of that, because once the dot-com bubble burst, I mean, honestly, Julia, there was nobody here. And this is a laughingstock. And, I came at the tail end of it. So, I wasn't chasing money necessarily. There was no money to be had because the stock market had imploded. But then when a market evolves, what happens is those same zealots do get remunerated. And then it attracts all kinds of actors who then focus on the money. And we're firmly in that second phase. And I don't know what corrects that, but Silicon Valley is no better than anybody else. And we're no smarter than anybody else. And in fact, we're probably, morally a little bit less strong than other markets, because in other places, in other sectors of the economy, you've had to be there because you loved it. And here, I think a lot of people are there because they think they're going to get paid. And frankly, look, a lot of the big tech companies, they greenmail their employees because they know that these stock options can be so worthwhile that they'd rather them stay at their company and do nothing than go and do something useful, because it just allows them to preserve market cap. So that's the real kind of honest truth about what Silicon Valley is, which is like, we're like everybody else. We go through phases of inferiority like everybody else. We are as greedy as other people. And mostly we're no better than anybody else. I just think that everybody except Silicon Valley has gotten the memo. So.
Well, Chamath Palihapitiya, the CEO of Social Capital, owner of the Golden State Warriors, and chairman of Virgin Galactic, I thank you so much for joining us on this episode of Yahoo Finance Presents.
Thanks, Julie.